Hello, everyone. Good evening to you, and welcome to another video tutorial on the US oil. If we look at what has been happening here in the last week, the US oil has continued its sideways action, and I am of the opinion that only if the oil prices regains its $80 level that we can see any bullish opportunity in this market. And with the situation of things right now, I would like to let you know that this is a follow up detail to my previous analysis. And talking about follow ups, I would like to share with you some key moments that we had during the course of last week's trading session before we go into the details for the week. So, talking about last week's trading session, we saw our price action continue to trade below that important key level that we have identified at the $80 level. We were hoping that price action would break out of that structure, but with the bearish gap that we saw at the beginning of the week, it was a sign that we might likely be seeing price drop to the downside. And in fact, we had a channel identified between the $79.40 area and the $79 area, looking out for either a breakout or breakdown of the channel to give us a trading opportunity. Then later on that day, we saw price action trigger our sell stop order right below the $79 level. We identified the bearish trend line here, and at this point, we were using the bearish trend line as a yardstick for a trend continuation to the downside. Then price action pushed us back. We saw bullish momentum came in, taking us out of all the sell position at the worst case scenario of break even. And as soon as price broke out of that bearish trend line, it was a signal for us that we might be having a momentum shift. Then we positioned ourselves right above the $79.40 level as we already had a buy stop order sitting there early on the week. We had that position triggered, hoping that price action will do a further breakout of the $80 level to add more position to our existing trade. And look at what happened here. Price action broke out of the $80 level, welcome additional position, moved our stop loss accordingly to secure the current position, and we were hoping that price action will continue further to the upside. However, on the 7th of March, that was the day the Fed chairman was doing his testimony at the Congress, we started seeing some consolidation phase around the $81 area and the $80.50 level, hereby giving us a clue that there is an indecision in the market as participants were looking forward to a catalyst that will be bringing liquidity into the market to drive price movement. And because of the situation we had there, we secured all position like I stated here. I told us all to secure our buy position as selling pressure resumes. And what we saw when price action continued in that direction, we had the bullish trend line identified, and we said if price action break down the bullish trend line, this will be a beautiful signal for us to anticipate a bearish momentum to the downside. And we said after the breakdown of structure, we want to see some retest, breakdown of the $80 level to have a sell position in that regard. So look at what we have here. We have the breakdown of the bullish trend line. We waited. I told us all to wait for some confirmation for trading opportunities as we want to see a retest of structure. Then we looked out for, we placed our sell stop order below the $80 level and look at what happened afterward. Price action moved significantly well in our favor. And look at what we had here. We had another position triggered at the breakdown retest of the $79 area. So we had two positions running here as at 7th of March. On Tuesday, we also added another position after price action hit our TP target here. So we were able to close Monday session with about 400 pips with two positions running. Then we looked forward to another opportunity at the breakdown retest of the $77.50 level, and in fact, price action moved initially in our favor before we started seeing some buy pressure coming in here. But fortunately for sellers, we saw the breakdown of the $77.20 area, which triggered another sell position in this market. So that did not last long anyways, as we started seeing some buy pressure here. So it got to a point we started seeing some oscillation between the $77.50 area and the $76.50 area where price consolidated around that area before finally gaining a momentum in the direction of a bullish momentum during the later part of the week. So it was quite a profitable week for us on the US oil as usual, as we were able to close another 300 pips on four position on all the buy positions we had during the last couple of days of last week. If you do want to examine how we took advantage of all of this opportunity in detail, I will be sharing the link to this commentary in the in the description box below. And if you are watching from my YouTube channel, you will be seeing the link at the top right hand side of your screen. So with that being said here, I will be diving right into the current structure, and without taking too much of your time, we shall be diving right into the current structure to see what is really going on here. And if you want to see how we got to this point, you might want to watch my previous analysis on the US also, that you can have a better perspective of how we got to this point. So what I will be doing in this video is to just zoom into the structure between the $80 level, which is the resistance point of that mini channel within the channel, and the $76 area, which is also has been characterized by buying pressure in the last couple of months. So with the situation of thing right now, we can see that price action is currently trading around the $76 level, and this level is going to be our yardstick for trading activity for this week. And what do I mean by that? Well, what I'm trying to say here is that I will be using this level at the $76 area to guide my trading activity in such a way that if price action trades above the $76 level, I will be looking out for buying opportunity. And if price action breaks down the $76 level followed by selling pressure on our lower time frame, then I will be anticipating a sell-off in this market. Now, how do we intend to take advantage of this? How do we intend to position ourselves in such a way that we can catch any of this opportunity when the market starts evolving in one particular direction? Well, before I scale down to the lower time frame, which I have a simple setup we can actually use to guide our trading activity, I would like to emphasize the importance of the buyers at this particular point in time. Now, look at what happened here in the month of December last year. We saw our price action after hitting the $70 level. Price continued to find higher lows, and as a result of this, when we connect the series of higher lows here in the last 3 to 4 months, you will see that we have a bullish trend line. So it, for me at this point, it's a sign that price action is trying to find some bullish momentum in this particular market. And like I said earlier, I will need price action to do a breakout of the $80 level, probably regain that price before I can be confident that a bullish momentum is likely going to be coming in anytime soon. So, with that being said here, and with the information we have gathered here on the daily time frame, let's quickly scale down into the 4 hours time frame, where I will be sharing with you that simple structure which I said I will be using to guide trading activity for this week. Now, looking at the 4 hours time frame, this is what I was able to identify after looking at the current price action in the last couple of months. Well, the first thing I was able to do here is to understand the fact that price action is looking a little bit bearish here. And if we had connected the series of lower highs effectively, you will see that we have this bearish trend line. Now, between the month of January and the month of March, the first day of this month, we saw how price action was consistently respecting this bearish trend line. However, during the beginning of this month, we saw finally a breakout of that trend line for the first time in 2 months to emphasize some level of bullish momentum in this market. And you all know from a technical standpoint, whenever we have a breakout of a structure like this, we expect that one point in time price is likely going to come back, do a retest of the structure that was broken to incite another wave of bullish momentum. So, if we take this technical theory into consideration, we might likely be seeing a bullish momentum going into the new week. Now, coupled with this technical parameter we just identified here, look at what has been happening here throughout the month of February. You can see that despite the strong selling momentum in this market, price action was unable to find a lower low. As you can see here, this is the lowest point in the last 1 month. And then price action tested the $74 level as price action was unable to break down this previous structure to emphasize that sellers are actually strong in this market. So if we take this bullish momentum coupled with the breakout of that bearish trend line here, I'm of the opinion that we might be getting ready for a bullish momentum. And if we are going to be getting ready for a bullish momentum, how do we want to be positioning ourselves, as we cannot just jump right into the current trade, as we need some further confirmations to give us that confidence to join that rally to the upside. Now, what we are going to be using now is that $76 level, which I shared with you on the daily time frame, which is going to be the key level that we shall be using to guide trading activity. So, what I want to be seeing this week is bullish momentum right above both the trend line and the $76 area to give me more comfort to join a bullish momentum in this market. So, I will want to see something like price action climbing right up, which is right up above the 70s at this moment. I want to see some buy pressure, giving me some form of liquidity reflected on the chart in the form of rejection of that $76 level by the buyers, sellers unable to break down that structure, then I will be comfortable to join that rally to the upside. However, if price action continue to find selling momentum in such a way that it breaks back down below the $76 level, then I'm of the opinion that if a breakdown of that bullish trend line here happens, we might have no choice than to start anticipating or getting ready to join a decline to the downside. So let's see how price action plays out around the structure. Be rest assured that I will be jumping in the comment section as usual to give you an update on what my expectations are after monitoring how participants in this market will be reacting to this current structure during the early hours of the new week. I hope this video has been of immense help in making your personal decision on the US oil, and if it did, kindly support this project by clicking the like button. Don't forget to follow me on my TradingView platform at Darksherry, spelled DARCSHERRY, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you on Monday morning as we get prepared for the new week. Just write in the comment section. Thank you for watching this video, and do have a wonderful evening, everyone. Bye bye.